Thank you, everybody, for staying through the last session. I joked that the last session often is sparsely attended, but given the recent price action in crypto, hopefully we have a little bit more interest in everything that we're going to talk about here today. But Justin, Tony, Augie, thanks for joining me. We have great diversity of panelists here. We have a builder in Ava Labs. We have a venture investor in CMT Digital, and we have a more liquid quant hedge fund approach from Tony. But I would like to just give you each 30 seconds, start with you, Tony. Just introduce yourself and your firm and your approach to investing or building in this space.
Sure, and thank you very much for having us here. Cambrian Asset Management is a San Francisco-based quantitative investment firm, long, short, liquid tokens. We have a 6-year track record. Our specific focus is on a risk-adjusted return stream. Downside protection is extremely important, although I guess when you have a period like the last couple of days, a little less fashionable, but risk-adjusted returns, very, very important to us. And we, as John said, we're a quantitative investment firm, and we have a very, very strong scientific bent to the work that we do, alongside we believe to be deep fiduciary experience. And as I said, 6-year track record, having launched our strategy in November 2018.
Justin?
My name is Justin Kim. I'm head of Asia for Ava Labs. And Ava Labs is a company, we're a software service company for Avalanche blockchain. And what we do at Ava Labs is basically help teams, companies, asset managers use blockchain and really improve their businesses. And we do work across verticals from gaming, digital assets, and enterprise. And in terms of digital asset space, we have worked with KKR, Wellington, and Franklin Templeton in tokenizing their flagship funds on blockchain. So we'd be happy to share some thoughts and ideas from behind the scenes and from our conversations with the partners. Thanks for having us.
Thank you. Augie?
Great. Hello, everyone. My name is Augie Ilag. I'm one of the investment partners and also head of Asia at CMT Digital. CMT Digital is the crypto and blockchain venture arm of CMT Group, a 27-year-old asset manager based out of the US. We've been investing in the space for about 8 years. 2016 is when we bought our first Bitcoin. We were the first crypto registered investment advisor in the US in 2017, and we've since raised and deployed 3 venture funds in the space, partnering with over 100 companies, including Falcon X, Circle, Coinbase, Axie Infinity, Athena, and many others. We're actually in the process of raising our 4th fund, and I would say couldn't be more excited about what we're seeing in the space today. Also, thank you for having us.
Great to have you here. So obviously in this industry, we've had a big week. Price action has been very positive. It seems like the Trump administration is going to be much more pro-crypto than the Biden administration. The US sort of leads the world on financial services, so I think sort of unbridled bullishness here in the last week. We'll start with Augie, just the events of the past week and this rosier outlook for crypto regulation. How is that going to affect the way you guys look at investing in the space, if at all? And how does it change your outlook for where you see your portfolio companies going over the next several years?
Yeah, it's a great question, because I would say that the lack of regulatory clarity globally, but especially in markets like the US, was one of the primary inhibitors to progress and, frankly, just innovation, right? There were many founders or even would-be founders that we spoke with, maybe based in the US, that were uncertain whether or not starting up in this sector made sense because of the enforcement actions that were taking place against crypto companies, because of the general lack of regulatory clarity. And so I think we are very excited about the events of last week, in particular as it relates to pro-crypto policymakers that have been instilled across both houses of Congress on both sides of the aisle. I think it was Brian Armstrong who tweeted about how 266 pro-crypto candidates were instilled in Congress in this last election. I think that's very positive for the space, just because on the back of that, hopefully we'll see new regulation that gives more clarity for both builders and investors, and I think that will help to push the pace of innovation forward. Frankly, that's one of the major differences that we've perceived between the work that I focus on here in Asia and sort of our investment philosophy in the US, which is in Asia, places like Hong Kong, Singapore to some extent, Japan, Dubai, have really pushed forward when it comes to this idea of regulatory clarity. The US has tended to lag behind. Hopefully this helps them catch up on that particular dimension.
Yeah, the crypto industry really flexed its muscles in terms of its influence in American politics as well. If you look at Fair Shake, which is the super PAC that was backed by Coinbase and others, they almost batted 1,000 in terms of the candidates that they backed winning their elections on both sides of the aisle, from Alyssa Slotkin in Michigan, Democrat, Gallego in Arizona, Democrat, Bernie Moreno in Ohio, Republican, unseating Sherrod Brown. And so Stand With Crypto is expanding its remit to now Australia, and I think the crypto industry probably is emboldened to flex its muscles in terms of trying to influence politics around the world. Justin, how does the AVAX token has done really well, like many others over the last week. What level of optimism does it give you that you're going to be able to execute on more of your plan here in Asia and around the world?
Yeah, I think you can look at the past 2 weeks from multiple perspectives as an investor, as a builder, right? But I think since we're a software service company, we're more focused on like having ideas as builder. And there are clearly signs of having some regulatory framework pretty soon in US, and it'll actually help a lot with invite the teams, enterprises, asset managers, financial institutions back into blockchain, back into using blockchain for their businesses. And that actually sets a new framework for new ideas and more acceptable ideas, because we have seen growth of stable coins being $180 billion. And there are more people now ready to use applications using blockchain. So I'm really excited about inviting back all the builders in the space.
Tony, what are your thoughts?
Well, I echo the thoughts that have been articulated. It is almost impossible to imagine what a change in outlook that this actually brings, because the industry generally, from innovators to investment participants, have been facing in the United States significant regulatory headwinds. And they have been abating, but there's a very good chance that we will have some significant tailwinds. And that's something that the industry has not really had. We're starting from a stronger base, and with these tailwinds, I think they can be very, very constructive. For my more specific vertical, you talked about innovation and innovation in particular, but in terms of the financial infrastructure, there are only incredible positives to come from improved participation, from improved players that now have regulatory clarity and just do not feel that they're going to be facing the risks. And so you can just see an avalanche of very, very high quality institutions apply what has been the norm in traditional finance and now being able to flex their muscles in a very innovative way in the digital asset space. And we're seeing that reflected in the prices. Having said that, it is still a volatile ecosystem. And it's always relevant to keep an eye on risks. And our systems, for example, having been very, very bullish 3 or 4 days ago, have begun to rein in some risks. So the risks have absolutely not disappeared, and they're important to keep in mind.
So if you're an investor in the audience and you're looking for ways to get access and exposure to this ecosystem, there's obviously a lot of different approaches that you can take, and we have some of those different approaches represented here on stage. I want to start with you, Tony. You talked about, you guys aren't just a long-only shop. You're, trying to exploit inefficiencies in crypto markets and give people a long-term exposure to the space with lower volatility, lower risk. What is, in your opinion, and perhaps you're biased because of the firm that you represent, but what is the best approach to investing in the space if you're an allocator in the audience and you're trying to evaluate all the different opportunities?
Well, you're right. I'm entirely biased. So it's, and I think it'd be difficult for me to articulate that we have the right and the only right solution. But there is, the liquid ecosystem has clearly been the one that has been, if you like, most threatened by the way that the regulators have interacted with industry in the United States over the past 2 or 3 years, and many of the enforcement actions have come towards players in the liquid ecosystem. So we're hoping that that will be an area where the benefits will accrue perhaps faster and in greater magnitude. The liquid investing has clear disadvantages, which is the mark-to-market. The advantages that it has is that you do not have to take asset selection risk. I would argue that you can also monitor track records. As an allocator, the track record process of analyzing a liquid manager is significantly more straightforward than a private manager by definition. And then I think that one of the other issues that is critically important is the fact, and I've mentioned asset selection risk, I've mentioned the idea of being able to benefit in a market that is not necessarily going up all the time. And one of the key factors to impress upon people is that the liquid ecosystem is very, very under-owned institutionally, in particularly in the United States. VC has been, relative to us, generously treated by the institutional investment ecosystem.
Yeah, it feels like allocators, they understand more of the picks and shovels aspect of the industry more than they understand the liquid token part of the industry. Augie, you're probably biased too, being at CMT Digital, focusing on early stage venture, but why do you think perhaps that investing in the early stages as a venture investor is the best way to get exposure to the space?
Yeah, no, I think, I'm also sort of biased on the other side of this camp, and obviously all of this sort of depends on the particular allocator, their risk preferences, and what their general portfolio strategy is. But I would say for those in the audience that have been following the space, maybe own a little Bitcoin, maybe some ETH, believe in the long-term future prospects of this industry, then an early stage venture strategy makes a lot of sense. And the reason that we believe that is, the reality is we are in the very, very early innings when it comes to the maturation of this technology. And what that means is many of the winners of tomorrow are just getting started or maybe don't even exist yet, right? And that's really the work that we are out here to do, to back those aspiring founders, building what will be the category-defining companies of tomorrow. And I think that's just where the industry is today, frankly. There has a lot of been built, but there's a long way to go, especially to realize that vision that one of the previous panelists mentioned of read, write, and own, right? I think that future is far away, and we need to invest in the folks who are building towards that future. Now, having said that, I think one of the things that we oftentimes think about is the line between private and public is actually not so clear in crypto as it is in, let's say, traditional assets, where we are investing at the seed stage in a company that is a private entity, but more often than not, they have plans to launch a token, and that will come sooner rather than later. And so it behooves us as private investors to still have that capability in-house, to be able to think, or put a different way, to have traders on our team that can help deal with that public market decision, as well as more classically trained venture professionals like myself that can deal with the private side. And so I think that's important in this asset class.
You get the best of both worlds with crypto, liquid venture, where you can get some price discovery earlier on. I want to change gears a little bit with you, Justin, and talk about Asia. You're the head of Asia for Ava Labs. We're here in Singapore, which perhaps is the most progressive and open country in Asia, but you're Korean, based in Korea. You also spend a lot of time in Japan. Could you talk specifically about, in Singapore, the work you've done with Project Guardian alongside JP Morgan, Citi, and the Monetary Authority of Singapore? For those that are less acquainted with that project, what the current update on those efforts is and how you guys have been involved.
Yeah, so Project Guardian is a blockchain initiative by MAS, and we did 2 sub-projects out of Project Guardian, one with JP Morgan and one with Citi. Citi, it was about adding transparency to FX trades. But with JP Morgan, it was more on extending capabilities of portfolio asset management on blockchain. So JP Morgan has Onyx, right? It's their blockchain asset management platform, but they were still limited in a way because they were usually their like universal expandable investable assets were limited to stocks, ETFs, what's electronically available, but they didn't have any access to private alternative assets but then What we did basically was actually expand the Onyx blockchain and connect it to Avalanche blockchain, where we already had tokenized interests of WisdomTree and Apollo. And by doing that, JP Morgan Onyx team, they were able to finally make portfolio allocations into this private interest they never had access to. And in tokenization, you actually get rid of all the paperwork. So some of the very impressive metrics out of this proof of concept was that they reduced 3,000 paperwork steps into a few clicks. And they reduced the cost by 20% because they eliminated cash drag, because every transfer, every wire, it's actually instant payment, instant settlement in the back. So they did save time, reduce cost, and they also saw increased revenue opportunity for alternative assets for the first time.
So Augie, I want to go back to you quickly. In terms of specific applications in blockchain and Web3, which applications are you most excited about today that have the biggest growth potential over the next several years?
Yeah, I guess to start, maybe some framing that is important, at least in our space, is the difference between what I call long-term, enduring, retentive growth and sort of flashes in the pan, the latter of which I think are unfortunately all too common in many crypto applications that you see. I think one of the hard lessons learned in the last cycle of crypto was that tokens as a technology are particularly well suited to building up the supply side of a network, but that doesn't mean that they will solve for the demand side, right? It was almost this mantra in crypto before that build it and they will come, build it and they will not come, right? Build it, focus on getting your first 10 customers, optimize LTV CAC, do your go-to-market strategy, and then marketing, and maybe they will come, I think is eventually where the industry has moved. And so I wanted to make that delineation clear because I think it also helps understand better what's working and what's not. The other thing I would mention just before I dive into the categories that we personally find interesting is there's also been change in terms of the underlying value proposition of crypto. Whereas before, everyone was widely of the view that crypto across every single use case and category can have an impact and makes the experience for users 10x better. I think broadly, we as an industry have walked away from that statement, and we've come to the realization that there are a few instances where adding tokenomics, adding cryptographic primitives, adding blockchain can create a 10x better user experience, but not every single category. And so the ones that stand out to us in the places that we think the consumer app types that we think will grow very rapidly over the next few years are first, payments and stablecoins, right? Crypto's oldest use case. Stablecoins as a technology to enable instantaneous settlement and lower transaction costs. There are companies in this space already, like our portfolio companies Strike and Circle, but I think there's still a lot of low-hanging fruit there, especially for certain corridors and certain flow types, call it B2B, for example. Two, crypto as an asset class is sort of the second type of app that we're excited about. Say what you will about the industry, people want to trade this stuff. And when I say people, I mean both institutions and also retail. And so we think a lot about what is the service provider stack that is necessary in order for institutions to invest in this asset class safely and in a compliant manner, and what are the products that can be offered to both retail institutions, let's say off the back of the Bitcoin ETF and other such catalysts. Index products, I think, are a wonderful example, something that we've been thinking about a lot, where retail investors, now that they've had whet their appetite on the Bitcoin ETF, might look towards index products as the next product they want to get into, baskets of currencies for certain sectors they're excited about, memes, DeFi, et cetera. That's the second one. The last thing that I'll mention is consumer apps, but I would say consumer apps specifically where embedding token incentives creates a 10x better user experience. And the example that I'll give you guys, I think, is prediction markets. I think prediction markets are just a wonderful example of how before, traditional polling, you may lie to the Gallup person for any number of reasons on who you're going to choose to vote for. But suddenly, when you add money to the mix, when you put money where your mouth is, the polling becomes much more accurate. And I think there's other such consumer use cases where actually embedding cryptographic incentives makes it a better experience. So those are some of the areas that we're excited about.
Tony, I want to go to you. So SkyBridge, the firm that I work for and represent here, is a fund of funds. We started performing due diligence on the digital asset space in 2017. We could not get comfortable at that time about sort of the institutional quality infrastructure that existed among digital asset hedge funds. Fast forward to 2020, we became comfortable and we started allocating into the space. We have a lot of institutional allocators at the event the last 2 days. What, in your conversations with institutional allocators, I'm talking about pensions, endowments, foundations, sovereign wealth funds, those types of investors, where are we in terms of getting that cohort comfortable with investing in the digital asset space, and how much does your approach resonate with that type of audience?
I think that one of the, I don't want to exaggerate by using the word tragic, but one of the very difficult issues that has surrounded crypto over the last couple of years, there's been so much negativity that some of the positive trends that we've seen both in use cases, but also in the overall ecosystem and the financial infrastructure have really gone in many ways unnoticed. I'll give you an example. Despite all the noise that the management team at JP Morgan often makes via Onyx, they're clearly participating. They are our administrator. We are their only mandate in dedicated crypto world. But the fact matter is that they are active participants. And like them, we're seeing more and more, but it's quiet. I mean, there have been two very specific important developments in custody, both at Ripple and at BitKey, the block organization, where it is clear that there are significant moves ahead in the separation of the trifecta, if you like, which is settlement, trading, and custody, which is customary in traditional markets and has not really been possible in crypto. So a lot of these adjustments have been taking place slowly. I think they're going to come to the fore very quickly now over the next period of time. And I think very, very reputable organizations, like Fidelity, for example, are going to be in the vanguard of that. And I just think that is going to be incredibly helpful to getting a lot of the investing institutions comfortable, not only on the investment due diligence side, but also on the operational due diligence side. And you've seen huge steps forward, for example, within Coinbase in terms of their product offering and just moving in a direction that gives classic confidence in things like segregation of assets and so on. Those things have been happening. They will accelerate, but I think that the institutional world has not really been totally aware of the speed at which these things have been improving.
So I want to finish with you, Justin. You talked about some of the tokenization of funds that Avalanche has been a part of. I think among all blockchains, Avalanche has been among the leaders in engaging with traditional institutions on tokenization of funds. Augie talked a little bit about the reputation that crypto has as being a solution in search of a problem, and perhaps the demand side not always being there for solutions that are created by blockchains. But could you talk a little bit how the demand side has shaped up in your work with Franklin Templeton on the Benji token, or you've seen BlackRock with the BITL tokenized money market fund, but how's the demand side shaping up in your view?
So it's quite interesting because we have so much supply. We hear so many news, a lot of new partnership in the space, in digital asset space, asset management, enterprise gaming. But there's very fewer demand compared to the supply that we have. But at the same time, I think the answer is more institutions, more asset managers, more government work that will actually create more demand, because I just want to make an analogy to cloud. When cloud first came out 10 years ago, no one used it. No one uploaded your private photos on cloud because you were scared. I think we're going through the same phase in terms of creating demand for crypto. But these are BlackRock, Franklin Templeton, KKR tokenizing their flagship funds on Avalanche, on blockchain. This is California DMV minting their car titles for 42 million registered cars for California residents. So this is how we actually create demand and get people in the game. So I think the answer is more institutions like yourself, more partner, more government, more enterprise.
Augie, Justin, Tony, thank you for joining me, and thank you everybody for sticking around for the last panel of iConnections Global Alt Asia. Thank you.
Thank you.
Thank you.